Good Monday morning, traders. This is Steve Ganz here, and I wanted to just provide an update on one of the start to finish series trades that I shared with the community here. So in this particular trade, I think I'd mentioned to you before that I bought one long call in Avgo. I bought this a long time ago. This is what's called a leap. So it had a long expiration date, does not expire until January 17th of 2025. So, and I bought this, back when I bought it, it was a 450 long call, but NVIDIA, of course, has split since then. So rather than one long call, I ended up, after the split, with 10 long calls at 45 instead of one long call at 450. Of course, the broker just automatically does that. There's nothing I needed to do in that scenario, and that's how that gets handled. Now, what I wanted to share, though, was, if you'll remember, back about a week, little over a week ago, on July 31st, I came and did a video, and you can look back in the series here and look for that video back around July 31st. So I was up very, very nicely in this 10 long calls. But I said at the time, I was a little leery of what might be happening with NVIDIA. So that was right here on this date. And NVIDIA had started in a downtrend. So this is a pretty well-defined channel to the downtrend. So it sold off, rallied back, sold off, rallied back. At that point, I've got essentially 2 points here, actually 3 points, showing we're in a downtrend. So when NVIDIA rallied back to this fourth point, I'm questioning, is it going to sell off again? And if it's going to sell off again, how might I be able to not suffer the full brunt of that sell-off? How can I hedge this position a little bit? So that's where this particular adjustment to this trade came in. So again, I started with this long call. Again, I'm just going to call them 10 long calls at 45. They're up about $95,000. And again, I needed to put a hedge in here because I was thinking that there might be a pullback. So I came in and I sold and I played with this. Again, in OptionStrat, this is one of the awesome things, is I came in and I played with, well, what if I sold 30 spreads? What if I sold 40 spreads? What if I sold 50 spreads? I wasn't trying to hedge the entire thing off in case I was wrong and the market did continue higher, but I wanted to provide enough of a hedge in here by selling this call spread against this one long call that if the market backed up, this spread is at least going to end up providing a level of profit into this trade. So I'm still a ways away from these expiring. We're still, a month and a half away. But let's just look at what's happened since then. So the market sold off considerably. Down here, that short call spread would have been worth a lot more than it is even now. But we've rallied back up now, hitting our downtrend line. So I need to watch this right now and see, gee, if we punch through with any strength, maybe I want to consider closing out that call spread. Let me get our pricing over here. But that call spread was sold all the way up here at 165. I sold the 165, and I believe it's the 175, if my memory serves me correctly. Yes, 165, 175. So I've got quite a ways that the market could still go up until it started creating issues for me. But the thing I want you to see right now is let's look at the difference in profitability. The long calls only suffered a pullback. As the market pulled back, this pulled back. So it was up, I think, about 104. So that dropped off about 10K, where this is not so much. And what I mean by that, or how that happens, is again, I sold this call spread. And so if we look at this, I sold this call on that big up day. I sold it for $7.65. It's currently worth about $4. So I picked up, let's just call it, for simplicity's sake, let's call it around $3 times 40. So, a significant amount of money there in potential profitability that can decay out of this. A good portion of that has already decayed out. So about $12,000 worth has already decayed out of this, from the $7.65 I sold it at to the $4 that it's worth roughly at this point. So again, this has generated about 12,000 in profitability, but I had the long side of this spread too. And in this case, I paid $4.20 and it's currently worth about $2. So I'm obviously losing on this particular option, but I'm not losing nearly as much in this as I'm making in this because this was closer to the money. So that was the goal here, is to put something in place that might decay over time, provide a little bit of a hedge to this trade that I have on. And when I say a hedge, one of the main things that I'm looking at here in this trade, if we come in and specifically look at deltas, is I wanted to basically take a little bit of sting, if you will, out of the deltas. So the delta is a measure of how much this position is going to go up or down when Avgo goes up or down $1 in price. And because I have 10 of these on and I've got a 1,000 delta, if this goes up a point, I'm up $1,000. If it drops, I'm down $1,000, okay? By putting in this hedge, I cut my deltas in half. So now the move up, well, yeah, if it rips up, yeah, I'm only going to pick up $500 per point up. If it drops, I'm only going to lose 500 points per point, or excuse me, $500 per point that I drop. So that delta has diminished, I guess, the strength of the move in both directions. But the thing I have going for me here is this one is decaying in the process. So over here, you'll notice that I have no theta at all because nothing's decaying on this one. But here, I'm picking up approximately $100 a day in theta decay, and this accelerates. The closer I get to expiration, the more this is going to heat up. And you can see right now, if I move this forward, what I'm looking to have happen, see right now I'm at 99,000 in profit. Let's just say that Avgo stays right where it is, but another 30 days ticks off. Well, rather than being at 99,000 in profit, I'm 106,000 in profit. Okay, if we get up here to 160, well, I'm 117,000 in profit. Over here, if we get to 160, I'm 104,000 in profit. So again, the key to this is I want people to understand that adding in this call spread here provided a level of hedge, again, that hedge being the reduction in delta so that I don't suffer as big of a loss in a pullback. And I could have hedged that in any way I wanted. If I wanted to put in 80 call spreads here, I could have taken that delta to 0. My theta would be double then. But in this case, if Avgo happened to have ripped up, be above my 165, then this is going to be going against me, where over here, you know, I'd be fat and happy if we ripped up above 165. There is no risk per se above 165 over here, where there is risk that starts to come into play above 165 over here. So again, I'm hoping that this sinks in a little bit as to what's happening here. And this is something that you can apply portfolio wide. So in other words, I happen to also have, you know, a long stock portfolio, an IRA, and at certain points in the market, I go in and I put on a hedge like this in the SPY or in the SPX or in the S&P futures, where I'll go in and I will sell a call spread above a point that I don't think our market is going to go. And then if I'm right and we get that little bit of a pullback, the pullback and the value that diminishes out of my long stock positions can largely be made up to some extent by this hedge. Again, I'm not usually trying to fully hedge an account. If I truly thought that we had impending doom here, you know, maybe I'd think differently. But generally speaking, I accept that the market goes in waves, and this current pullback we're in, you know, 7, 8%, 10%, is not abnormal. And so when we start to get back to highs that I think might be a downturning point again, I will either start hedging. In some cases, I'll hedge individual stock positions by doing exactly what I've done here. In some cases, if some of the stock positions that I hold either A, don't have options that I can do that on, or the options are not liquid. If they're not highly liquid where I could get good fills, then I'll just use SPY or SPX instead, and I'll sell a call spread like this against my entire portfolio of stock. So again, hopefully this makes sense. If you like this sort of content, please give me a comment below. Let us all know that yes, you find this to be of some value. If there are specific topics or subjects that you'd like to see in the future, I have been building a list of those. And again, certainly like and subscribe. So that's it. Take care, everyone.